All right. Hello and welcome back to another live episode of Lightspeed. Lightspeed in real time. We're here with the real-time blockchain, Mega ETH. Very excited to have them on today. You know, this was going to be a pre-recorded episode, but the timeline was alight with talk of the Mega ETH ICO, kind of a blockbuster public sale so far. I think over 300 million has been committed at the maximum price last I checked. So very excited to have Lei and Namek, two members of the founding team over at Mega ETH. Join me on the pod. Lei, Namek, thanks for coming on Lightspeed.
Very excited.
Thanks for having us.
Thanks.
So Mega ETH is an Ethereum layer 2 that I guess you could say is quite spiritually aligned with Solana in the sense that it places a really high premium on performance. Mega ETH has thrown out numbers such as 100,000 transactions per second, sub 10 millisecond block times, sub-cent transaction fees, lots of things that, you know, Solana in its current state cannot even do. But I think there is this sort of connection where both Solana and Mega ETH place a very high premium on performance. So I am kind of interested to dive into this with you guys today, and maybe just to kick us off, I wanted to ask, give like just a brief overview of what Mega ETH is and sort of how you've thought about constructing a layer 2 that is most optimized for performance.
Yeah, I can take that question. So I'll do a technical version, and Namek might have a version with more risk. But so Mega ETH is basically the end game for blockchain performance scaling, and the core ingredient is basically this layer 2 construction, because we kind of realized that the only path towards maximization of performance is to centralize block production. And because it's only with centralized block production can you have really low interblock time and really high TPS, because you can put a ton of resources, hardware, software optimizations to a few sequencers and to really beef it up. And the end result is just what we call a real-time blockchain, and we build it as a Ethereum layer 2 because a layer 2 is just a perfect fit for a centralized block production system. And the process or the actual product is just a layer 2 that has a ton of optimizations. So, for example, we are doing parallelization of EVM and transaction production. We are adding JIT compilation or just-in-time compilation for transactions, because we kind of realized that this EVM interpretation is one of the key bottlenecks. We are replacing the Ethereum Merkle Patricia trie with an in-house data structure, because we also realized it's kind of the main bottleneck of EVM block production. And I can go on with a list of optimizations, and the end result is basically a blockchain where you can basically expect Web2 level performance and responsiveness.
I guess one question to follow that though is, what are the trade-offs made? Because to my understanding, you know, there's a single sequencer with Mega ETH, and from what I've read, you guys aren't necessarily going to decentralize that sequencer, which is something that other L2s at least sort of claim that they are going to do down the road. So is my understanding correct there? And then what are the sort of some of the other trade-offs that help you arrive at this place where you have that high performance?
Yeah, good question. So I wouldn't say that we don't plan to decentralize, but I will say that we want to decentralize in a different way, because again, I mentioned that centralized block production is the only way to performance maximization. And here, to be more precise, centralized block production is more like clustered block production, in the sense that you have one leader or one machine pumping out a ton of blocks before you switch this active role to the next machine. And this is really because if you have two machines ping pong with each other, then the network latency between the two machines can really become the critical component of interblock time. Because say I produce a block and I cannot expect Namek to just keep up and take over my job within say 10 milliseconds, because say from from the US to Turkey is probably 150 milliseconds of latency. It's just speed of light, it's physics, right? So what we will do is we'll have what we call sequencer rotation. Instead of switching the active role of sequencing every block or every few blocks, we might do, say, 1 hour or 2 hours. And we can even like create a schedule ahead of time that follows the peak activity around the world, such that most of the users will have the lowest access latency to the sequencers. So is it a form of decentralization? I would say so, right? Because you can say skip a leader candidate, because maybe if the leader candidate is down for the day, and you can have the same anti-censorship accountability stuff that can just let people reject a leader sequencer if the leader sequencer is behaving weirdly. So I would say we are having almost all the benefits of a decentralized sequencer, but just more like performance minded. And you also asked about trade-offs. So I would say the only trade-off, so to speak, is that we are layer 2. And I personally don't take it as a trade-off, because it's more like, I would say it's more like you're like sliding on the Pareto frontier from between maximizing decentralization and maximizing performance. And it's kind of inevitable that if you want performance, you have to kind of do more localized, clustered block production, and that's exactly what layer 2 gives us. And I would say what we're doing is just to kind of do the extreme version of the layer 2 vision. So it's not, I would not say it's a trade-off, but it's just a different choice.
Yeah, hopping in here, I think the simplest thesis we have is that the level of performance that will be achieved in a consensus-based blockchain is not the end game of performance, right? And the only way to achieve this level of performance is with a layer 2 construction. And we believe that existing layer 2s have not fully, for lack of a better word, exploited the upside of being a layer 2, right? The level of juice there is to squeeze being a layer 2 while maintaining those exact same decentralization properties, all the other layer 2s, hasn't been fully achieved. So what we're doing is we're saying, hey, let's not look at what people have done in the past, and let's not take any of the underlying existing assumptions of, you know, what a blockchain that's a layer 2 is meant to be like and what those decisions need to be, and let's just rebuild a blockchain as the fastest, most performant possible execution environment. And it is a layer 2 because, again, we don't think consensus is necessarily conductive to performance. And it ends up being able to achieve a very, very high level of performance that existing L2s haven't necessarily cracked just yet. So yeah, I mean, there's trade-offs, but those trade-offs are associated with every single layer 2. And there was a good debate, I think, between I think it was Gabe Shapiro and LexNode, as well as Anatoly, over what kind of assets are possible with a forced exit window and what are not. And that's a great conversation to have. But when you're agreeing that there is a forced exit and what the values of those are, we believe that end game environment hasn't been built to the extent that it can be, and that's what we're doing.
To bring this down to a base level a little bit more, I guess a big assumption that MegaETH, like other layer 2s, make is that your L2 inherits security from Ethereum, correct? And that's why having a centralized sequencer is acceptable. I want to start there because I think that this is something that's reemerged as sort of a debate on the timeline recently. And maybe people in the Solana world are a little more skeptical of this claim that, Ethereum security can be sort of extended to these layer 2s. And, certainly in the case of MegaETH, that seems like an important distinction. So kind of sell me on the case for why, Ethereum's base layer security extends to L2s.
Yeah, I can take the question. So if you look at a blockchain, or if you look at a what we call a append-only ledger, there are two properties you are really looking for. The first is called safety. Basically, no reorg, no forking, finality is finality, no reversal. And the second is called liveness, which says if I want to send a transaction, it gets in eventually. Of course, the system cannot be congested, but eventually, if I want to pay up, my transaction should be able to get in and get executed. So these are the two main properties you are looking for. And yeah, let me try to make the case why the layer 2 architecture delivers that, right? So first on safety, it's actually quite simple. So the sequencer, of course, it produces blocks. For now, it's just the sequencer itself. So yeah, the sequencer can feel free to reverse whatever block it produces, but the sequencer is going to anchor those blocks it produces by submitting the hash or even the blocks themselves onto the Ethereum layer 1. And then all the other followers, say wallets, clients, your exchanges, your custodians, when they look at your blockchain, when they look at your layer 2, they will not just listen to the sequencer's words. They are going to take a look at the layer 1 and follow the data blobs, follow the anchors the sequencer has published to the layer 1. And they will derive, it's a term in layer 2 world, it's called derivation. So basically that's the process of taking a look at the layer 1 data and then reconstruct the shape of the layer 2. So notice that here, this process only uses the layer 1 state as the input. And we know that Ethereum is by far the most decentralized blockchain in the world. And if there's the last chain to fork or to reorg is going to be Ethereum. So if you just accept that Ethereum will not reorg, then if you follow the derivation rule, then the layer 2 chain that you derive will also not reorg. So this is where safety comes from. And for liveness, it's because Ethereum, the layer 1, also ensures liveness. You can submit transactions, and if you wait for long enough, and if you pay sufficiently high gas fees, your transaction will get in. So now, within this derivation rule that I mentioned, you can require the sequencer to include whatever transaction that are posted onto the layer 1. There's a special contract called an inbox on the layer 1. And if I want to force a transaction onto the layer 2, I just submit my transaction to the layer 1 inbox. And the sequencer, because of the derivation rule, because it does not want to produce an invalid block, it's forced to grab all the transactions in the layer 1 inbox and prepend them to the block it's producing. So this is the mechanism that enforces the sequencer to just be sure to grab all the transactions in the inbox. And this is the kind of the way we anchor the liveness, which is transaction availability, onto the layer 1 liveness. Yeah, so this is kind of the high level overview.
Okay, and before we dive too much deeper here, I think this gives kind of a sense of the contours of MegaETH, of what we're dealing with here. But I also don't want to bury the lead too much, which is that today is the day that the MegaETH public sale, that the ICO began. As I mentioned at the top, there's now $340 million US dollars committed at the max token price. Can you guys just? I think this is a very significant event. It's we've seen a few ICOs recently, especially through kind of Kobe's Echo platform. The MegaETH one has to be up there with the most significant that have happened yet. It's quite an interesting measure of animal spirits in crypto, which are still very much alive, as you're seeing from today. Maybe just walk me through the decision to do to go the ICO route with some of the token supply. And then I also am just curious to hear about the auction mechanism that you're going with and how that's going to work exactly for folks who might be a little confused.
Yeah, I think I'd like to start with a bit more about like our ethos when it came to distribution and ownership. All right. So I remember when I got into crypto, the reason like I was able to do decently well was because there were all of these like liquid opportunities in the market, right? Like crypto was first and foremost a liquid market of equal opportunity, equal access. And what we saw in 21, 22, 23 was the increasing level of effectively the role that primary markets had to play in price discovery, right? We went from having like an angel round, a seed round, and then you go live with your protocol and you build a company, and anyone who has conviction in your protocol is able to participate from the earliest of stages, to effectively, insta getting like a multi-billion-dollar, super low float, super high FDV token where like only insiders effectively have any exposure. And I think that really burned CT, right? And also burned crypto participants as a whole. And I think the regulatory landscape effectively made it so that none of us could run public sales or ICOs or anything where we let normal stakeholders, normal people, can effectively show their conviction in the protocol, right? And what happened was we tried to figure out this airdrop stuff. And airdrops are interesting because it assumes that every single user wants to be an owner, and it also assumes that like the actions of the user are genuine, right? So there's a lot of these if-then statements which I think have more or less failed, right? Yes, Hyperliquid, fantastic airdrop example of an airdrop, but that's because the airdrop was directly tied to trading fees, right? The people who are actually power users were able to hold the asset that represented like what they do, right? They became owners in what they provide value to. So I think our take was very lucky in many ways. We started building Mega just as the regulatory landscape became a lot more pro-crypto and was pro-democratization of crypto. And we decided very early on that we don't believe in airdrops. We believe in providing skin in the game at fair valuations, right? And it's difficult to decide what that fair valuation is, but we first saw that of our Echo round, right? So last year we hosted an Echo round with Kobe on the effectively like the public group of Echo. We sold 5% of the supply with the same terms as well as the same valuation as the round we did to Vitalik, Buterin, to Joe Lubin, Kobe, Dragonfly, as well as some Solana names like Mert and Austin. And it was awesome. I believe we sold out in 3 minutes. 80% of Echo users tried to participate. And I think in some ways we helped inspire this generation of like ICOs, right? We were really happy with the Echo sale, but obviously it had its pros and cons. One of the main one was KYC. So we then proceeded to do this Fluffle NFT collection, where we effectively did no KYC alongside AML. So we were able to do AML while not doing like intrusive KYC, which we thought was a win-win situation. We provided different vesting opportunities there. So it was 500 mil with a 50% unlock, 6-month linear.
Can I cut you off, Namik?
Sure.
What does it mean? No, this is great. This is actually really really interesting stuff. But how do you do anti-money laundering without KYC? I'm curious.
100%. Basically, what we did is we looked at the wallets themselves. We basically looked at the wallets and we said, hey, are these wallets attached to North Korea? Are these wallets attached to OFAC? Or anything that's not allowed, right? Now, there were cons to this decision because, for example, American accredited investors, we weren't able to, because we had no KYC, we couldn't tell if someone was an accredited American or non-accredited American. So we had to VPN block the US, right? Which sucks. We don't like doing it, but we also don't want to go to jail. So there's pros and cons for everything. So yeah, that's how you do. That's how we were able to do AML without KYC. So yeah, that was the Fluffle. And I think that, again, we were trying to show with wise words, right? Different trade-offs in like the risk to reward preference curve. And as mainnet was approaching, and TG was approaching, we basically asked ourselves a question of, hey, how do we further distribute the network to make sure the stakeholders are actually the largest public buyers or the largest owners of Mega? So for context, MegaETH team has a little bit over 9% of the supply. VCs have 14% of the supply. And we have announced a lot of cool utility like KPI vesting. I don't know if you want to talk about that later, Jack. But this public sale we're doing with Sonar actually makes public sale, well, just like community members that participate in these sales, people who want to be owners, the largest stakeholder in MegaETH for 15% of the supply, right? And that's not like a fake number that's obfuscated. That's real. Those are individuals who have come in and they've bought Mega in one way, shape, or form. And in terms of the valuation, the auction mechanism, like it's not up to Lei and I to decide what the valuation of Mega should be, right? We had opportunities to raise in private rounds to VCs at very high valuations, but then we would fall victim to what I think is not our own success. We would end up enabling price discovery in primary markets compared to secondary markets, right? So what we decided to do is we decided to do this auction starting at a 1 mil FDV, and we chose 999 mil, just shy of a unicorn, to cap the auction, right? Effectively saying, we don't want there to be unbounded price discovery for auction, because when you do that, someone always loses in the short term. We want to pick something that we think is like, above this number, we don't think it's fair anymore, and we just ran with it. And to much to our surprise, we're oversubscribed. That's very kind of the community. Let's see what happens. But yeah, all of this was done structurally so we can effectively allow people who want to be part of the MegaETH story to get skin in the game meaningfully, as opposed to participate in this farming strategy, which in my opinion just wasn't right for Mega. I haven't really seen it work for layer 2 super well yet.
And to make sure I'm understanding correctly, it's an English auction, so the price is bid upwards over time, right? And when you reach when the auction concludes, folks will receive these tokens priced at whatever price they bid at.
Yeah.
Does that affect the price at which MegaETH will begin trading? Like, will it begin trading at the final auction price, or is that a separate kind of mechanic?
Yeah, sure. So, I unfortunately, there's a lot of misconceptions on how token listings happen, right? So, the team doesn't have so much control over where an asset opens. Unfortunately, like that's what sexes do. We obviously have a bit more discretion on dexes, right? Because we can, talk to the dexes building on Mega. But yeah, I mean, we'll see where the asset opens. I hope it doesn't open too high. That goes against what we're trying to do here. But we do what we can, right? And what we could do is we want to get as many stakeholders and potential, people who want to be investors in Mega at valuations which we could determine. And that would be the echo round, the fluffle round, and the public sale round.
But the opening price on sexes would presumably be higher than the price of the ICO. You would think.
Yeah, I would assume that's the case. Yeah.
And then there's also this thing where I guess all US investors and then some global investors can receive a 10% discount on the price in exchange for agreeing to a 1-year lockup, right?
Yeah. So the thinking here is, the sale is for people. The sale is really for two people, right? Two categories. The first is our OG community members, right? Like these are the people who have been riding Mega from day one. They had no economic incentive to do so. Like we've been very clear that we don't believe in airdrops. And it's not like this public sale is coming out of nowhere. Like we've been doing this. So the first component of this is really like, hey, people who have shown up, helped us out during times of weakness. Like these are people that we really want in, and they get the allocation they want. And I think the second thing we're focusing on is obviously like people who are in for the long haul, right? People who effectively have a vision of they believe in the MegaETH thesis, they want to get exposure to MegaETH thesis, and they don't look at anything like a quick trade, right? Like me and Lei aren't looking at this as a quick trade. And if the stakeholders in this public sale, we wouldn't want them to be looking at this as a quick trade. So, obviously the US accredited investors have to lock up, right? Following US laws. But we are also giving the opportunity for, shares like stakeholders to effectively say, hey, I'd like to lock up as well for a year for that extra discount because I wasn't planning on selling it anyways, right? And the 10% discount's nice.
And you said as well that it's a 1 billion or just shy of a 1 billion FTV. Is that right?
Yeah, the cap of the auction is at $999 million, and that's currently we've basically hit the cap so far to sell.
That seems like a pretty low FTV, right? Like I'm just thinking off the top of my head, Pump Fund was 4 billion.
Yeah, I mean, I think that Pump.Fund is a fantastic company. They've been around a lot longer than us. They've launched a company, right? They had great numbers. And I think that like ultimately Pump.Fund had a different strategy than ours, right? Like I think that Pump sold a large portion of the network, 25%. So there was a lot of demand there. And I just saw Brother Bing's message. There was a lot of demand there, and there was a lot to sell, right? With Mega, we're selling a lot less of the network. So what we're focusing on less is how much are we selling, and more on who are we selling to. And we're being very mindful with who gets allocation here versus who doesn't.
Mm-hmm. Yeah, it seems like ICOs are going to become the norm. Like I think that airdrops existed mostly for regulatory reasons. They're not good for anybody involved, really. I I think if you like gun to the head of like most founders, they would tell you that. And even just looking, I think watching the Pump Fun airdrop take place was pretty illuminating for this, because Pump Fun was valued quite high. On a price to earnings basis, you could argue that 4 billion was fair for Pump's FDV or whatever, but still, like, they sold tokens to the market at a $4 billion FDV and of 4 billion FDV right now. Months later, like it hasn't followed the typical chart of these like airdrop tokens that are basically a meme coin. So it seems to me like this is going to become the norm, and Mega ETH, I don't know this ICO is going to go, but there's clear market demand for it based on how oversubscribed it. I think 6 times oversubscribed at the moment. It seems like this is, part of a broader trend of where crypto is probably headed over the next couple of years.
Yeah, I think we're just glad to be able to play a small role in it. The decentralization of effectively these kinds of opportunities, I think, is really important for crypto to mature and heal effectively. I can't hear you. Lei, can you hear Drac?
You're muted.
Here we are. Lei, Mega ETH is sort of your brainchild, right?
Yeah, it's a brainchild of the entire founding team, both the biz strategy, which Namik explained really well, and on the tech side, it's like a collaboration.
He's too humble.
Okay, you're being humble. You're being humble. The only reason I ask is that I kind of wanted to get a sense from you, because I think reading through a lot of the public documentation and messaging around Mega ETH, it thinks about blockchain in a kind of novel way from how maybe a lot of people in the EVM world might, or even in the Solana world. So I kind of want, this is like a very vague question, and apologies if it's annoying, but I just want to ask, like, what is a blockchain to you, and what are blockchains actually useful for in the real world?
Interesting. I think a blockchain is just I view it as a genie up there, and it's like a good custodian of any kind of computation that you want to entrust to. That's really my mental model. I initially I didn't really grasp that, but then the more I worked on blockchain research, the more I'm kind of attracted to it. So basically, if you think of the cloud, yes, it has a ton of computational capacity, and you can say run your bank on it, you can run Google, you can run OpenAI, whatever, right? But the thing is, you don't actually know what the cloud is actually going to do to your program. Maybe you tell the cloud that, hey, please run this AI model, and will the cloud just sneakily sneak some malicious code into it? I don't know, right? Blockchain is just the enhanced version of the cloud, because in addition to being permissionless and accessible, it also guarantees correctness of execution and just openness to every user that potentially wants to access your application. I think it's just a very interesting complement of this cloud computing that we have been seeing for so many years, probably starting from 2005. And I just see it as a very natural next chapter for cloud computing. And yeah, that's my mental model for a blockchain. But on a more technical model, yes, it's I have a few characterizations. It's an atomic broadcast channel. It's an immutable append-only ledger. It's a replicated state machine. Yeah, I can go on, but yeah, like this genie up there that just you can deploy any kind of code and be sure that the genie is going to execute your code correctly and make it accessible to anyone who wants to use your code. It is my more and more like a romantic view of a blockchain.
So the kind of next evolution of cloud computing is probably a little different from how a lot of folks might talk about blockchains or have historically, right? Like I feel like there's kind of a difference there between how you view blockchain and a lot of folks in the current crypto world do. Does that strike you as accurate?
I think so. I think my characterization is from like from a utility perspective, and I feel like many people, especially people who have doubts over layer twos, I think they are mostly looking at blockchain from like a construction-based view. So they would probably imagine that there has to be a consensus algorithm, a bunch of nodes geographically distributed, validating each other's work. But the end result is just like in aggregation, in abstraction, is just a computer, quote unquote, a service that you can deploy code to and be sure that it's going to run your code correctly. Yes, so if the construction is a bit different, and my perspective is from like a utility, the kind of guarantees, the kind of service a blockchain provides, and I guess that's also the reason we kind of decided that, hey, let's forget about traditional constructions, let's explore layer twos, and let's push it to the maximum. And yeah, because we build like we kind of think that consensus algorithms and decentralization of block production, they are just one part of means to an end. And yeah, the idea is just we can build a blockchain from a very different perspective, from a clean sheet design, and we can build something that's much more performance, kind of the founding story of the tech part.
And you also began, Lei, by saying that MegaETH is something like the culmination of what layer twos are. Like it is the final form of L2s.
Yeah, I would say so. Yeah.
If MegaETH comes out and it is everything that you all are kind of talking about it being, do you think that really changes the way that people think about L2s, or maybe the direction that the L2 sector is going to go in more broadly?
I think so, and I think we're already seeing some trends, at least from the tech part. I'm sure Namik can talk about the business part in a bit, but yeah, I would think though, because yeah, I think to us, I think the way that layer two sector can thrive is really to differentiate from layer ones. Layer ones, they should focus on decentralization and providing a good security foundation, and layer twos, they serve as the performance scaling layer, making full use of the layer ones, but also just exploring its own strength, which is centralized block production, low latency, high throughput. Yeah, so I would think, yeah, so to us, of course, it's like the right way in our mind to build a layer two. And I would say if we come out, I would hope that this can be like a way that more layer twos can explore. But I know that Namik have much more to say on the business part.
Yeah, I mean, I guess just like, super left curve take. I think they're buzzwords, to be completely honest, right? Like, if you have an L1, if all of the validators controlled by the team, I mean, like, okay, what's the point, right? I don't know. Like, clearly the point isn't decentralization, right? The point is something else. So yeah, like I think 3 years from now, we're not going to be saying, oh, this is an L2, this is an L1. Okay. I think we're just going to more or less be saying, hey, this blockchain gives me this property with this trade-off, right? And I mean, I don't know if you'd agree, Jack, right? Because I know that you're a big Solana guy, but I would argue that like Ethereum L1 will remain the best chain if you want to do $100 million transaction on it, right? Like in the world, you're doing like $1 billion Aave position or something insane like that. Maybe you don't want to use. Like, I mean, I love Aave, so I'm not going to say anything. But like, ETH L1 is basically where you're probably going to want to do that, and that's okay, right? Now, Solana's market proposition, in my opinion, for the longest time was it was able to explore the trade-off curve of being, slightly more centralized in the short term, to effectively achieve a level of performance that no L1 nor L2 has ever been able to achieve. And it was able to spawn an entire new asset class and not entire new design space for applications. And for Solana, that's the ideal trade-off, right? Certain level of decentralization, certain level of performance, and the idea being all these things that's going to happen on the roadmap to become even more performant. I believe that's the future. It's not going to be like, okay, are you an L2 or not? But like, what are you basically able to offer users, and what are trade-offs you're making to get there? And then are those trade-offs worth it or not? And that's what the market will decide, right? Like if there are no apps on Mega that are good, and there's no marginal difference, it's all forks between Mega and like or any other chain, including L2s, including L1s. I don't understand why MegaETH needs to exist, right? We failed. As a team, we failed. Yeah. So in my opinion, like hopefully the opinion of L2s will change, but mostly because I think we need to kind of not be thinking about stuff in such like PvP terms of like, this is my camp, this is your camp. And we should think of things more from like, hey, what can we do to like enable the next leg up for crypto innovation and also crypto adoption? And obviously myself and they believe that, that's Mega. I mean, that's not just Mega, but that's also just L2s as a construct. But we could be wrong. Which is why we like Solana in a lot of ways too, right? Like we identify with Solana in many ways.
Yeah, I suppose the response to that is that decentralization exists along multiple axes, and so it's maybe a bit simplistic to say that Solana is more more centralized than Ethereum is, with like qualifying the claim. I guess things like validator clients, it is the case that there is really one true validator client today. The full Firedancer project is yet to completely take off. But as far as the validator set goes and things, it's a more complicated story. But maybe tabling that for a second so we don't get derailed as a debatable topic.
I wasn't trying to start a war. I'm a simple ETH card, right? So I only know my ETH talking points. Much respect to Saul.
But I still want to ask though, like why not just be a layer one? Because you maybe alluded to like something like Hyperliquid, which when it launched was like 4 co-located nodes, Tokyo or whatever, and is like very high performance by dint of being close to Binance basically. And I would think that the Hyperliquid token is this kind of premium on its valuation because it's an L1 as opposed to an L2. So why is ETH so important that it's worth kind of being ETH L2 as opposed to just less decentralized L1?
Yeah, I will, pop in here real quick and then I'll pass it over to Lei. I think fundamentally it's because we're not basing our decisions on like token valuation, right? Like, and that might be like very bearish or something. I don't really care. Like the long term, like, firstly, Mega cannot be as performant as a layer one, right? At least like not like we can. What's the point of being a layer one has like free co-located validators? Like that does not have the best architecture for the trade-offs, right? Like Mega settling onto Ethereum, inheriting Ethereum security to enable that user experience is a better trade-off. And if we don't build it, long-term someone else will build it. And that person will win because for funds, for money, for users, it makes more sense to go and use a L2 that sells onto Ethereum and gives me those security promises compared to an L1 that's like fully centralized that, if team decides to rug, can rug, right? So I think fundamentally the reason why we don't do it is because we sort of need to, this is like the end game architecture. And like, it doesn't matter if there's a valuation premium doing something else, we will do this. And on the point of Hyperliquid, I think Hyperliquid is like brilliant. I also believe that like, I personally would probably not recommend that they continue to more and more decentralize the validator set. The more they decentralize the validator set, the more they become less competitive, right? Like the more margin they lose on performance. And I think like, that obviously Jeff is much smarter than me and he's thinking about this and like the team is brilliant, but it is definitely like, it's a point to be made. And I think it's not a point you have to worry about if you were a layer two. You wouldn't have to worry about this trade-off between validator size and decentralization and the impact on performance, because you have the best of both worlds. And it's personally an architecture I believe in more in the long run. Late.
Yeah, it's Namik basically said it all. And yeah, so I guess on the technical front, it's really that we don't like to reinvent wheels, because and also I really have to agree with Namik that, yeah, this layer 1 versus layer 2 premium token values, we have never thought about it at all, I think, in the decision making process up until today. Yeah, really, because we at least within the team, we don't really distinguish layer 1s and layer 2s. They're just different ways to build blockchains. Layer 1s, they have their own validator set. They kind of bootstrap their own security in the sense of safety and liveness that I mentioned. Layer 2s, they delegate the chore and the hard work of bootstrapping security to some other chain, and just focus on transaction processing and sequencing and block and transaction ordering. So it's just a different way to build a blockchain. It's, yeah, I hate this. I hate to use the buzzword, but it's basically like a modular way to build a blockchain. You don't really like attempt to tackle the entire stack. You focus your energy on one part of the stack, which is execution, and you delegate the hard work of security and consensus bootstrapping to some other chain. Yeah, and so I think if we would build ourselves as a layer 1, then I think it's a bit of mid-curving in terms of design, because as I mentioned, there's a fundamental trade-off between decentralization of block production and performance. Because if the active role of who gets to produce the next block hops around the world, then each handover is going to take a few hundred milliseconds, because it just takes that much time to transmit information bits, which travels at 2/3 of the speed of light in vacuum, in fibers, to the next city, right? So it's just going to like cause those hiccups to your network. And if you have a slider, you can slide between decentralization of production and performance, but you cannot get the best of both worlds. And so to us, also, like on a business sense, I think it's easier to win if you kind of focus on one thing, because if you can just focus maximizing performance, then you are sure that you're going to capture the far end of performance seeking apps, and it's just much easier to sell to them than go to an app, say, hey, we are the best, we are the most performant blockchain EVM blockchain or any blockchain you can ever found, versus telling them that, hey, we have like 70% performance, 30% decentralization, and 0% security, whatever.
This is the perfect trade-off. Like explaining to people
exactly.
why that's good. Yeah.
Yeah, it's like going to shop. It's 30% fat, 70% lean meat. I don't know. I don't know how I want to pick, right? So I think it's just much easier to sell to app developers and capture a market segment. And so if we kind of go backwards from that business decision, we want to simplify our offering, which is maximization of performance. Then going back there too is the perfect example. Of course, we could have like done a blockchain with centralized block production with our own consensus cluster, like find maybe 100 validators that just repeats what the sequencer does. But what's the point, right? Centralized block production cannot go around it, and you need a consensus cluster to attest to what the sequencer did. Hey, it's just a layer 2, right? Why don't you just replace the measly 100 node cluster with Ethereum layer 1, right? So this kind of the logic.
Okay, and be that as it may,
you're muted for me again.
Yeah, you're muted. Yeah.
Dude, I always have
Sorry,
mic
guys,
issues. I feel you so much. I feel you so much. You have no idea.
yeah, I'm like I'm not I'm unmuting. It's just I don't know. Anyways, Lei, one thing that we used to talk about more on this podcast, and this debate has just faded from view a little bit, I think. But I want to get your perspective on the claim that L2s are basically parasitic to Ethereum, in the sense that, you know, the Ethereum base layer is not very scalable. It gets quite expensive if you want to make those, billion-dollar transactions that Namik is talking about. And so a lot of the transaction activity on Ethereum has been shuttled off to these layer twos. And with some of the recent design decisions that Ethereum has taken, very little sort of economic value is paid back to the L1 by the L2s. And if you look at something like Mega ETH, which wants to do 100,000 TPS, if there are 100,000 TPS to even do in crypto, who knows? But wants to do lots and lots of transactions, right? Does that end up being kind of negative for ETH the asset, let's say, and bullish for Mega the asset?
Yeah, let me touch base on this real quick. I think like this idea that Ethereum will go and play someone else's game and win is like really fucking stupid. No offense. Like Ethereum's not going to be like more performant than Solana, and it's not going to be more performant than Monad. It's not going to be like a better, like, nothing will change. Okay. It shouldn't go compete with Celestia. It shouldn't go compete with a Monad or a Solana. Like Ethereum, in my opinion, is really good at one thing, and that is their competitive edge. Just how Lei was describing, like we go to the absolute extremes of everything, right? Like Ethereum is the most decentralized, in our opinion, at least, is the most decentralized blockchain in the world. The second it loses that, I think it's game over for ETH. I truly believe it's game over for ETH. So, for better or for worse, we need to make these L2s work in a way that's good for Ethereum. And what do I believe is good for Ethereum? I think what's good for Ethereum is Ethereum becoming the de facto settlement layer for the entire world. And yes, John Charbonneau might say, where's the revenue? Okay. Or something like this. But like, it doesn't matter. If we all believe that Ethereum and crypto and like Solana and all this entire market's going to 10x in size over the next 6 years, right? Like there is enough demand to be the world settlement layer for it to be intrinsically valuable, right? Now, what has to happen is these layer twos need to be designed in a way that they can't become layer ones. I think that's the bigger danger, right? You go in, you effectively, you vampire attack Ethereum's liquidity, Ethereum's users, right? Ethereum's XYZ. And because you're not even leveraging a layer two architecture truly, it's not that difficult to become a layer one. And now you have like, $5 billion in liquidity and, all these users. And before you know it, you're L1, right? And now Ethereum is actually in trouble because it's actually losing a bunch of assets. I think this whole debate of having L2s parasitic to the chain, I think it is very much a conversation of like extreme bear pain, right? When all the coins are bleeding every single day, we have to find the story that explains why our coins are bleeding, right? Like the reason why ETH is up is not because of the new, like slightly different EF roadmap. It's because Tom Lee went around and said ETH is digital oil, which is a story that works with L2s, right? Like Mega will have ETH as gas, right? Because there's no need to. It's like the Mega's not meant to be like, oh yeah, we're going to try and fully abstract away ETH. There's no point. It's in our name. Mega's only possible because of ETH. And yes, will the fees be pretty negligible? Sure, the fees will be negligible. The fees don't matter, is my opinion. What matters is Mega enabling a design space that no Alt L1 can do, only enabling that because of Ethereum, and bringing on users and use cases and applications that can't exist anywhere else, powered by ETH, then ETH wins, in my opinion. Everything else I really think is like peak mid-curve depression. All my coins are down. I need to find the reason.
So let's talk about that design space then.
Yeah.
Because some of the numbers that Mega ETH throws out, which again, all subject to kind of see how it plays out in the real world, but to use the numbers you guys have shown, like you've talked since the beginning, I think, about sub 10 millisecond block times. Solana currently has 400 millisecond block times. That's a 40x improvement. You've talked about 100,000 TPS. I think Solana's current theoretical maximum is something like 60,000. That's a big improvement as well. If if Mega ETH pulls these things off, how do you think about the kinds of use cases or businesses or applications that would be enabled by that we just don't have in crypto right now because we're constrained, by the throughput?
Sure. So I'm going to let me find a way to show you some of these apps. But I think that just I have insane ADHD. But the answer is not going to be on TPS until the whole world comes on chain LARP. The answer will be, in our opinion, these latency and effectively, super gas intensive smart contracts. I'll let Lei touch on the latter while I touch on the former. I think our fundamental opinion is when you can bring latency and end-to-end latency as low as possible, there's a bunch of unlocks in just financial markets and DeFi, right? But more importantly, I think there's an amazing unlock in a user experience, right? So for example, one of the best examples is this app called Euphoria that's being built on MegaETH. They've announced their fundraise earlier on, and this is not a good demo. Right, you'll see it here. It's loading. Let me make this work. But basically, it's tap trading, right? You tap on a tile, and that effectively, if the price goes there, you make that money. And it effectively it's enabled because you have effectively a real-time price feed. And there was an announcement recently, a couple of weeks ago, that we announced of Chainlink. We effectively worked with Chainlink to bring real-time price feeds on chain. So when you have real-time price feeds, you can start playing around with all kinds of new user experiences, which we believe can actually bring the world on chain, right? So I think that the answer is latency sensitive applications. The difference between the MegaETH and the other chains, right, is that yes, do we have is it L2 100%? But every single 10 milliseconds when a block is pushed, that block is law on MegaETH, right? It's as good as law. So you're effectively able to build applications like this. I wish I could show you, but I mean, I can send you a link of someone else talking about the app on Twitter with a visual, if that helps. Do you want that or no need?
We'll throw it in the show notes. Yeah. Okay. I mean, also the comments are on screen. You can kind of link to it there. Thank you to those of you who have commented, by the way. That makes sense. I think, it maybe gets at a bigger question, which is crypto's problem, to the extent it has a problem, performance? Is that the fundamental bottleneck? Because it's always funny to me when we talk about these TPS numbers. Solana speaks about 1 million TPS down the line in the future, and how that could theoretically be possible. And it's are there 1 million TPS to do with the amount of trading that's happening on Solana currently? No. You would not use even close to that capacity. Maybe if Trump launches another meme coin, you get a lot of transactions. But that's the larger question this maybe taps into as well.
Yeah, I think
it's. Go ahead, Namik. I'll take it first. Yeah, I think it's pretty easy to kind of underestimate demand based on the capacity we have right now, because I was watching. Yeah, I'm an Apple fan, so I'll admit. So I was watching a Steve Jobs presentation year 2000. I think it was launching Power Mac G4 Cube, and he was very proudly stating that, hey, this Mac comes with a standard 32 megabyte of RAM and 1.5 gigabyte max. Wow, that's a lot. That's 2000. And look at my computer right now. It's 32 gigabytes of RAM. And somehow my operating system manages to, let me check. It manages to fill up 28 out of the 32 gigabytes. So back in 2000, if you ask a programmer, hey, you're now given a 32 gigabyte of RAM, what do you do with it? You would say, well, I don't know, maybe garbage data, right? And if you then go back by another 20 years and ask, say, a programmer at NASA, I think they launched the rocket to the moon with just a few megabytes of RAM. So I think my point is, with a limited amount of resources, it's always possible to do amazing things. I think what we have right now on Ethereum and on Solana, given the current capacities, it's amazing. I think it's purely magical that we have such a big DeFi economy and an ecosystem on the current blockchains. However, I don't think that's like kind of the indication of what can be built if you 10x, 100x the capacity. So that's my that's my point. I think this kind of mindset of abundance is really important because first, I think at least it unlocks developer productivity because I think a big part of the pain for smart contract developers is this gas golfing activity, right? Just trying to squeeze out the last bit of gas from your contract. It's bug inducing and at least it's labor intensive. If you don't have to worry about gas with higher TPS also comes with higher gas limit, right? Maybe each person can just build 2x, 3x, 4x more interesting apps. And I think that's where the real unlocks lies in. It's just democratizing smart contract programming. Is no longer because like programming in assembly language was what programmers did back in the 80s, in the 60s. I don't think they can build like the operating system and the browsers that we use today with just that limited tool chains. And I think same goes for smart contracts. I think it's really early now still for smart contract programming, and the future smart contracts can use a ton of more computational capacity.
That was a good analogy. You know, there's many internet and crypto analogies that have been made, and that's the first time I've heard that particular one. So well done, Lei. I give you your flowers for that one. That's most of what I'd wanted to chat with you guys about. I think is there anything else we should know? Is there any other alpha on the pod today, or things that folks should look out for coming up? I mean, it's an exciting time for Mega ETH as you kind of watch this auction unfold in real time. But yeah, what have we not touched on that we should get into here?
You're muted.
I think we're very non-stop, eh? I think we're just very grateful to have had the opportunity to talk to you today. I think like the Solana community is awesome, and we have been inspired by them in a lot of ways, right? Like we're very much focused on applications. We're very much focused on products. We have an incubator called the Mega Mafia, where we basically work many months IRL with teams on trying to build cool apps. And yeah, like I think we're just trying to build a chain and like make Ethereum great again, for better or for worse. So we'll see how it turns out.
Mega ETH is insanely ambitious. Shoot, I'm gonna mess up this pasta. It's one of the most egalitarian things we've ever created, and if it works, it could really reshape the fabric of society. Yeah. I totally misquoted that.
You got it,
y'all. It's been very fun chatting with you, Namek, Lei. Thank you for taking the time, dealing with all the technical difficulties of the live stream and so forth. Thank you to all of you if you tuned in as well to watch us here live. But yeah, we'll be excited to watch how this all unfolds as Mega ETH barrels towards mainnet. Lei, Namek, thank you guys so much for joining me on Lightspeed.
Thank you so much.
Thank you so much for having us.
Thanks.
If you listeners made it this far in the show, we really appreciate you. If you enjoyed the episode, we'd love a like, a 5-star review, wherever you get your podcasts. If you like Lightspeed, please share it with a friend, and we will see you all again very soon. Goodbye now. Goodbye, chat. Goodbye, chat. We'll see you soon.